Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, algo artisans and everybody else. We are looking at the quarter-over-quarter GDP data coming out right now, but the chart that you see right now is NASDAQ at all-time highs. What war? All price did was go up since since forever. It did look like it was going to hit some resistance back in May, mid-May. All it did was stair step up. And of course, there's a little bit of panic, if you will, or just, I wouldn't even call this panic. This is like a light sell-off. This is like a retracement on the way up when all the fighting started. And then it just, powered up, made all-time highs. Doesn't look like it's going to stop anytime soon. And you got a lot of talking heads out there saying, oh, it's a short squeeze and it's time to sell it. And guess what? My charts don't say that. I mean, maybe short term you'll see some kind of pullback, but I'm seeing nothing but bullishness right now for the foreseeable future. Now that could change, and another month goes by, and there's also the fact that we are at the end of the quarter, right? And we're actually at the end of the first half of the year. We're at the end of what a lot of the fiscal agreements for like the U.S., like for example, our commitments to Ukraine, those end tomorrow, or it might be Monday. I have to look at the calendar here. As a matter of fact, while we're here, let's take a look at the calendar. Let's see what the quarter-over-quarter data meant, and then we're going to do some prognostication, some chart stuff. So GDP was lower than usual. So what that's going to do is it's mixed data today, but I think the heavier data is going to be quarter-over-quarter final GDP, which just hit right now. And it's significantly lower than expected. All right. So that means the economy is shrinking. That means that having high rates has done its job. Now, it doesn't mean that that's the absolute answer. And it doesn't mean, hey, we're going to cut rates just because of this number. But that's what this number is going to point at, to which that number will contribute. Right. So now unemployment claims are actually lower than usual by, a handful of percent, maybe 2-3%, whatever the number is. Not a big divergence from the expected. Right. So we had a bit of a nice kind of the recent unemployment is not as bad. Not as many people filing. So that's going to contribute a little bit to, we still need to keep the rates high because the economy is good. And low rates or let's just say a bad economy print like final GDP quarter over quarter, that's going to contribute to Powell's data, where he can make a reason for an interest rate cut. Interest rate cuts mean money is cheaper and markets will go up. So if we take a look to see how the markets react to this, we look at the very low time frame stuff. The data on the NASDAQ is delayed. I don't pay for data for NASDAQ because I don't really trade the NASDAQ right now. But if I look at the JPY, USD JPY, you'll see the USD actually got stronger as compared to JPY, which is unexpected. So I would bet that the euro got weaker, and there it is. So the market is actually reacting. The market has been very backwards lately, and I've been putting together some theories on this. Talking to V the Gorilla and listening to guys like Tom Luongo, and Tom's really good at the plumbing. I really recommend you talk to him or listen to his content. I'm actually a member of his Patreon. But long story short, it seems like right now, it seems like the world is being flooded with dollars. And that actually is a good thing for U.S. exports. It's not hurting what we're trying to do, because a lot of people thought that it would. And maybe if it continued or got worse, it might hurt what we're trying to do as far as like reindustrializing, things like that. But in reality, more dollars means more liquidity. And the demand for dollars actually is high. And that's why the world's being flooded with it. The demand for dollars is actually high because now that we're in a scenario where places like Europe or Great Britain or, Switzerland and those kind of areas, their currency is rising very hard. If you go back in time and I zoom out here, you'll see with the euro, of course, this is only on the 5-minute chart. But if I go to a much higher time frame like the daily, you can look back and see that the euro has been going up since like the beginning of the year and doing nothing else. And this kind of move is not very common. We are looking at what is almost an Elliott wave. So the fifth the fifth move of the Elliott wave, this last move up right here, it's hard to say when it will end, but it does look like this is being forced up. This doesn't look like a realistic move. So I would be real careful with this. But to look at the algos, certainly it's bullish, but it's bullish against resistance. And if and when this thing finally snaps around to the downside, if it ever does, that's going to be crazy. That's going to be a hard move down because it's just been forced up. Now, how does that affect economies for this to be forced up, right? Well, okay, we talked about this, but when your currency is high compared to other currencies, it's hard to export. Well, Europe does have exports. They do make things, just compared to, China and even the US, they don't really make a whole lot. A lot of the companies that are in Europe are actually coming to the US because Europe is just so unfriendly to business. They're highly socialist over there. And at this point, they're just pretty much stealing money from their people. That's what socialism really is. And so, when taken to that extreme, it certainly is. I think in the reality of things, there's always going to be some socialism. I don't think we can just eradicate it and have a free economy. We've never had a free economy, and as much of a libertarian at heart as I may be, I just don't think that's really possible outside of some kind of collapse, which we might be headed towards, right? And I don't want to see a collapse. So I don't want to see us go to the most realistic scenario where libertarianism actually is possible. I'd rather have us kind of continue along the current line where we are slowly getting rid of the more extreme leftist policies, at least here in the US. I don't think Europe's going to do that, though. And their currencies are just getting stronger. Look at the USD versus the GBP. It's the same kind of thing. Maybe even a bit more bullish in recent times. The pound is skyrocketing compared to the dollar. Australia is not in Europe, but the AUD USD is also getting pretty strong. It didn't break down when it algorithmically could have. And if you look back over time on the higher time frame, it has been very bullish for some time now. The Aussie also has a very strong connection with gold. So it bottomed out here and really popped back up, and it's been on a move up going back to before the beginning of the year. If you look at the Swissy USD-CHF, this is USD first, so the USD is going down very strong in comparison to the Swiss, right? So it's like the opposite of the euro. So the dollar is getting weaker, which makes our exports better. And then we get to collect on the back end from the tariffs. So the tariffs are now pretty much around the world down to about 10%. That's a very oversimplified version of reality, but that's kind of what it is. So we're able to export. We're able to make money on the exports. We're able to collect the extra 10% to fund whatever it is we want to do. So that's kind of a picture of the world. Now that the data is out, let's take a look at Bitcoin. We got a couple minutes left here that I can prognosticate. Well, look at that. I don't know that I need to change that prediction. That's just Bitcoin bounced right where I thought it would kind of take a bigger move down. It topped out right about here. I do think we'll see another move up. That's just based on price action. Let's take a look at the algos. It's running into some resistance here. So, but I do think it's going to slowly continue to grind up. But as it does that, until there is a real breakout, I expect this slow grind to have some sharper pullbacks, right? So you might see, and this is, a little, I don't like kind of predicting too far out, but we might see like another kind of sharper pullback once it reaches one of these resistances. Maybe like right here might have a sharper pullback. But then I think it's going to get caught somewhere, like maybe here, maybe even here. So I don't know that it's going to go below 100,000. If the NASDAQ continues up, then this will probably continue up. Bitcoin does during the bull market have its own kind of plan, but it may go down to 104, 102, 100, whatever the number is, whatever that might be. And then I think it's going to start to grind up again. And then the pullbacks may end up being kind of less severe until it just breaks out. That's the bullish scenario. And I don't really care to predict what's going to happen that far out. That's not how I do things, because right now the landscape changes just so quickly. It's really hard to keep up with things. But I will say that this current move that I drew, And then this is just on a lower time frame, but it's the same exact drawing. I think this is pretty legit. I think it might actually come down to about here. It might dip a little bit lower. In the meantime, it could go a little bit lower, like I talked about earlier. But at any rate, I think we're going to see just a kind of a gentle, but a little bit longer pullback, and then a resumption upwards. And I'm not going to be able to really say how far it's going to pull back until it kind of actually happens. But we have some ideas based on where liquidity was in the past, and price structure, price action, things like that. So that's what I expect with Bitcoin right now. NASDAQ, sure, on the short term, there might be some pullbacks, but I gave these targets out, I think, just to Algo Factory, where I thought price might go. And this, this 22,459 is kind of a target that's already been met, if you will. But I do think we'll see 22,715. But remember, a lot can change in the next 2 days. So I wouldn't be taking any positions today or tomorrow that are not like hit and run. I might day trade next day, today, tomorrow, maybe. I do have a personal matter today, so I probably won't be trading. And tomorrow's pretty much the last important trading day of the quarter. Let me take a look to see. Thursday 26th, Saturday the 28th. And then you have, so Monday, actually, I think technically is the last day of the quarter, but Friday is actually, I think the futures on OPEX expire. And last Friday's options expiration was, I think, the largest in history. And so tomorrow, I think, is when the futures on those expire. So I would be very, very careful, because when you have large expirations, the problem with that is that you have very large companies with very large positions. And if those positions are underwater, especially at the end of the quarter or the end of the first half of the year or the end of the fiscal year, which I believe is for many companies and the US government, they needed their balance sheets to look a certain way, right? So even if price algorithmically wants to go in a direction, it might be that it's pushed otherwise, because a lot of these large companies, the big asset managers, they have very similar tables and formulas, and so they may all be betting in the same way. And the repercussion of those trades going badly is massive at the end of the quarter. They need their balance sheets to look a certain way. So it's almost like maybe taking the next 2 days off is not the worst idea from trading. So that's that. And I'm going to leave you with that. I'm going to head over to the private live lab here, but don't forget, right? Get your free algo, links in the description, and we'll go ahead and get you on a list. You can give us a fake name. We don't care. We just need your email. And then what we will do is send you updates, market updates, and we'll send you some data as to when this mythical workshop will happen. I've had just so much going on that I haven't bothered to do the workshop, and I didn't want to do a workshop at the end of the quarter, not when trading gets a little funky. We'll wait. And the war, and it's just, things were really, really unpredictable, and I just chose to hold off on the workshop until probably next quarter. So I'll send you an invite to that. It's going to be free, and it'll be the only one that is free. Everyone after that will be paid. So understand that that's coming. Thank you for watching. I love you all. And as you move on with the rest of your day and the rest of your week, don't forget,
join us or die.
Just kidding. Nobody's going to die. Just having a little bit of fun. Thank you, Alan Rickman. Rest in peace. And we will see you next Tuesday. And also keep an eye out for the Sunday report. See ya.